Hello everyone. Thank you for tuning in. In today's profitable video, we're looking to cover all about the budget 2026, the US-India trade deal and its implications on the investor. Along with it, 2026 outlook for equity, gold, silver, bonds, real estate and global equity. How do we position our portfolio and a special message for recent investors? Of course, a standard disclaimer, investments are subject to market risks. Starting with the union budget presented on Sunday, for investors, it is a status quo budget. It is a continuation of 2025 budget, no major announcements. Whereas for F&O traders, there was a substantial hike in securities transaction tax, which has implications in terms of trading and volumes and profitability. Overall verdict for the budget, life goes on for investors as usual, and the budget will be forgotten by end of this week if you've not already forgotten about it. Pro tip, more rewarding to focus on the important budget, which is your own investments budget. Next, coming to the US-India trade deal announced on Monday. Well, announcements are done, but knowing Trump, there will still be more changes, more, you can say, threatens and whatnot going forward as well. So right now it is acting as a sentiment booster, but no real stock market implications in terms of higher earnings, except for a couple of the impacted sectors like textiles, aquaculture, and a few more like gems and jewelry as such. But otherwise, it's a good to have deal as such, but no real implications. Now coming to the important part, investment outlook for 2026. So let's get started first with what happened in 2025. Gold and silver, as you already knowing, record-breaking year, asset class of the year. Sensex and Nifty, we've had a positive 10th consecutive positive year. Returns were not much. Equity mutual funds, again, low-key year, 8 to 10%. Small and mid-cap funds had much lower returns. Bond funds, fixed deposits had a stable return yielding year. Interest rates have been cut going forward. US and Japanese markets had a strong year with indices up 15 to 20%. China and Brazil, these were the standout markets, very strong returns. Cryptos had a volatile year, shot up to record highs, but ended the year with negative returns. Important point to note here, asset class of 2024 was cryptos. They gave negative returns in 2025. And worst performing market in 2024, which was Brazil, was amongst the highest return with a 50% return in 2025. 2026 outlook for Indian equities to begin with. Some of the factors that will impact the market favorably: low oil prices, low interest rates, no inflation, GST and income tax rate cuts which have happened in the last year. Should impact the consumer demand positively. So positive factors. Unpredictable factors, well, it's Donald Trump. Now with Greenland, Iran, Canada, Russia, we don't know what else he's going to be targeting. So that can create volatility. Broadly speaking, outlook for the first half looks volatile, but in the second half, we will see the domestic factors weighing favorably in the market. One point to note, we are just in a fair value zone. We are not very attractive levels, so gradual accumulation in the market would work best. 2026 outlook for gold, bonds, international equity. Well, gold and silver likely to have a volatile year. They've already begun on a volatile note. But more importantly, I feel that we should have a below average return year for these two asset classes. US big tech and AI dependent stocks, no more a short shot, likely to have large swings. China, Brazil, other emerging markets after a strong 2025, likely to have a more moderate 2026. Bond markets, that funds should have a steady return because interest rates are not likely to go up in a hurry in India at least. Cryptos currently out of favor, but Trump is known to be a crypto bull, so we need to see how it moves. Outlook for real estate. Firstly, 2025, as expected, grade A builders have shown strong sales. But what we're seeing is that they've come up with innovative payment plans, stretched delivery schedules, and most units are being bought by investors expecting to find other investors who will buy at even higher prices. So Slowdown is definitely visible, but price correction unlikely to happen because everybody is sitting on a good amount of cash pile. Older apartments, especially 8 to 10 years and beyond, and smaller developer plots are really finding it difficult because transactions have dried up. Agricultural lands and big builder plots, grade A plots as you call it, are selling well, can continue to sell well. I don't know if the prices will continue to go up because people are building a scarcity story, though people are stretching cities far and wide, 50 kilometers from Bangalore, and still we're calling it Bangalore. So we really need to see. Now, a message for recent investors who've gotten into investing in the last 12 to 18 months. 2025, well, it was an average year, even below average, you could call it. And 2026 is likely to be the same, more boring in rather than exciting. Typically, an SIP investor needs to wait for 3 to 4 years before he sees stability and returns in the portfolio. And this is no different. Next 6 months will likely further test your patience, but a great time to build a good long term portfolio. And of course, do remember what you sow is what you reap. So focus on how much you're investing, where you're investing, rather than immediate returns. Portfolio construction for 2026, most asset classes likely to have higher volatility. So be mindful of that. And what did well in 2025, unlikely to repeat in 2026. For a long term portfolio, given the current outlook, Indian equity is one of the better options. Look to allocate gradually, and a diversified multi-asset portfolio with highest allocation to Indian equity, followed by some allocation to bonds and global equity, and a smaller allocation to gold and silver should make sense. Additional avenues like specialized investment funds, gift city products, InvITs, REITs, all are suitable for specific requirements, not for, let's say, 98% of the people. Key takeaways: please gear up for another volatile year 2026. So stick to your investment plan and don't chase past returns. Would recommend that we construct a portfolio with the following goals: maximum peace of mind, ease of transactions, and minimum time involvement and tracking. Last but not the least, please be mindful that I can go completely wrong. For 2025, I definitely did not predict gold and silver to be the asset class of the year. Of course, some of the asset classes I got my predictions right. You can check the last year's video. India, relatively poor returns. China, Brazil, good returns. Bonds to be a stable return. And US tech is no more all horse play. Some winners, some not so great performers. So, well, invest based on your goals, not based on returns. And do like and share this video if you found it interesting. Thank you. Happy investing.